Welcome everybody. Good morning. This is the Saturday morning webinar. If you're here to learn about trading the futures markets using the Viper tools, you are in the right spot. First, we got to knock out our standard disclaimer so we get on to see some trades. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know you do trade at your own sole discretion. All right, now on Thursday night, this is sort of a part two continuation of last Thursday. So I know that Gary posted the recording from Thursday night. That's part one. I strongly urge everybody to go and watch that if you can, if you haven't already seen it. I think it's both on the web and the subscriber area. I did promise in the tail end of that webinar that I would look at gold and crude oil, which we did not get a chance to look at on Thursday. Now, I'm going to add some things in here. I will do a partial recap of Thursday, what we covered, so that everybody isn't sort of starting from scratch. So I'll do that in just a second. But what I want to show you on gold is this, and I want to show that there are times in the market when you should be trading and times in the market where you shouldn't be trading. And one of the most important things is to identify what the trend condition is. And I'd say that's probably, aside from instrument selection, of course, knowing whether you're in a trend or not and what that trend is extremely important to your trading. And so for what I want to do here today, this morning, is the first part is I want to go through and make sure that we're all real clear in defining when there is a trend and when there isn't. Okay, so this is gold, but before we dive into gold, I want to show YM first, and in particular, YM from Friday afternoon. In fact, all the equities kind of look like this, and this is really important. I want to really spend some time. And I want to talk about how you can do it in real time, because I know there's a lot of skepticism out there, like, oh yeah, you know, and so you look back and say, well, yeah, you were. So what I'm looking at specifically is from this point here, which was a little bit after 8 o'clock Pacific. I'm here in California, so translate these times down here to your local time. You know, add an hour, 2 or 3. If you're on the East Coast, you're Eastern, you'd be 3 hours ahead of this. So it was 8 o'clock Pacific. We went into pretty much a sideways price action here, and it got really choppy and bad into the close. Here's the close right over here. Now here's what you want to do, because we hear this all the time. Well, how do I know at the time it's happening that I'm in the chop? How do I know I'm going sideways? So here's how you do it. You need at least 2, preferably 3 connection points. Okay? So let's do it this way together. And I want to do this exercise together a couple of times until we really get, until we really get it down. I'm going to start over here before 8 o'clock and work forward into the close, and then I'm going to come back and we're going to look at some other setups and make sure we're all clear on this together. Here you can see that we trended up a little bit around 7. You can, after the open here, let me just start the open and work forward. Okay, here's 6:30. This is the open of the market. You were still kind of range bound, but it was giving you little trades, but they weren't really turning out to be much. Remember it was pretty choppy on Friday. Remember, you know, here we come down, here we come up. You get a long trade. Here it starts to get short. Can't really take out the support level, so it's pretty clear. Support's pretty solid down here. Remember YM hitting that down there? Just kept hitting it and bouncing. Remember? Okay. It came up, and then you get a little long trade, and then sure enough, they rip the thing. The shorties, sell programs rip this thing all the way back down. We caught this rollover here at 97. We got the tail end of that trade, remember? And then it starts to head up again. Buy programs, buyers stepping in, pullbacks. These are long trades, these pullbacks here, right? All right. So what you want to do is, you can see whenever you establish you want to start to put, and Gary is real good in the room about this, and we should all become experts in drawing these lines. We knew before we got to 8 o'clock, or even 8:20 here, that there was resistance on YM right up in here. We already knew that, right? I mean, came up here close to hitting it a couple of times, came close here, and established pretty strong swing up here around the 60, 70 area. And so, you could make the case that it was setting in some more swings, more or less in here. It's pretty clear on this chart. I think everybody would agree that that is the resistance area. Yes? So then, and we have some support areas defined as well. We have one over here, and we have another one with this large spike down here. See it down there, that spike that established. It took this swing out and then put in a load right here. Now you can do this on any chart. Any chart where you have swings established like this. We'll do it on gold, we'll do it on oil, we'll do it on all sorts of charts. So then what you're looking for is this is a pretty big area. You're talking about 660 to 770. This is 110 ticks. I mean, arguably, the whole morning you are within this 100 tick range, yes? So now if you're going to get into smaller consolidation areas, you're going to start to look for swings that are located somewhere in here, either in here or we already know in here. And that would establish your range for the rest of the morning and perhaps for the rest of the day. So let's do that together. Okay, here we're pulling back off that resistance level. Now watch, we're going to put in a swing here, right? See it? See, just under 10. Hits the mid-band and rolls. Arguably, you had a short here, yes? Little box, region box short off the mid-band. So we see that, right? Keeps checking that 10. Now it's finding support at 10. See that little double bottom at 10? So it's slightly above here, and it's slightly above here. But when you see this on your chart, and it really, like I said, it doesn't matter. You can be trading the currencies, 6E, dollar index. It doesn't matter. When you see this pattern, you just quickly come in and pop a little line in there like that. Now, the reason we do this is, and you can do it at the open. You can do it throughout the course of the day. You can do it 8 o'clock in the morning. You can do it into the close. The reason this is so helpful is that once you have these two lines established, that you have to know that as long as you remain within the confines of these two lines, you are range bound and not trending, right? That's the definition of the lack of a trend or sideways motion, is you are no longer putting in higher highs or higher lows. You are in a range. Now let's continue on and see if this is verified. So what we would look for is continued challenges of the top and bottom of the range, and here, let's do it together. There, pokes it up, hits it, pokes it up, hits it, pokes it up, hits it, comes down to the bottom, down to the bottom, down to the bottom, checks it, bips through it just a little bit, back up in your face, back up in your face, back up to the top. Now I want to come back. Everybody sees that, right? That's how you do it. So what I'm saying is here you are all the way over here at 11 o'clock, 3 hours later, and the lines that you drew at support and resistance way back here at 8:20 remained intact for the most part. Now one of the most challenging parts of this is not only how to trade it. Of course, that's challenging in and of itself. We're going to talk about in a second. But you're going to get challenges where these areas will be breached like this. And we have to be very cognizant and careful of the fact that this is not a trend break. Okay? Some people might be saying to themselves, well, look, the background turned red. This is a lower swing. It took this out. To me, it looks to me like we're heading down, and this is going to become a downtrend now, and I'm going to look for shorts. Well, maybe you got a short up in here, maybe you didn't. But it starts chopping sideways, and then it goes right back up in your face to the top. I know it's really hard in real time. Some instruments here, it does it again. It does it a couple of times. Now, in this case here, when this breach occurred and the background turned red and it started bouncing down off the midband here, you might have been shorting this. Depending on your fills and how fast this was coming at you, you might have got some scalps off here, very small, 6, 8, 10, maybe not even 10 ticks. And that's tough because as you're trying to short that, already resistance or support is right here. In other words, the distance between support and where you're looking to get short is very small. You're trying to short the midband at 18, 19. You're probably not getting filled until maybe 14 or 15, and support is down here just under 10. I mean, there's just no meat on a ball, and this is just gristle. This is very risky gristle down here. And knowing the fact that you're in this larger range, that it could bip up to the top and come right in your face and stop you out, which is exactly what it did right there. So what's the bottom line when you see a market that looks like this, and you put your lines in? Are you going to trade this? This is a question for the team here, and individually to each of you. Is this something you would trade, or would you stand down? I mean, you have to know yourself as a trader. I mean, some of you I know are very good at trading ranges, and you would say, Charles, I think I'd be shorting the top up here, resistance, covering down here and buying down here and looking for a bounce. The range overall is about 40 ticks. So to some of you might say, yeah, I could trade that range. This is where you have to know yourself as a trader. Paul says, I watched that market and I stood down. Michael P says, I'm staying out of it. John H says, probably no, I would not trade it. Toby says, I would stand down. Haven't gotten to the point where I can trade ranges effectively yet. Okay, good. So this falls into the category of you have to know when not to trade. Okay, there are circumstances in markets where if you're not comfortable, I mean, very early on, you can see that this range was established, and it only got worse into the close. Now, what do I mean by worse? I mean, look at this mess right here. I mean, the only thing I can say about this is it is just flat out untradeable. That is just untradeable. There's no discernible point to get in. Are you shorting it here? Are you trying to cover here? Are you buying down here with a risk that it bips through and stops you out for some reason? It's not getting back to the top really here. This support's holding. I mean, where do you get in this mess? And where do you get out of it? So, there are times when you just look at a market and you say, this is not for me. This is really important, and this is why I want to spend some time early this morning on this topic, is that I know some of you still try to attempt to trade something like that and get whack-a-mole around, and this is an account chomper. If you want to donate to the trade gods and your broker is paying them all that commission to get in and out of that mess, you're better off just avoiding it altogether. All right, cool. Any questions on that? Yeah, take Friday afternoon off and not get beat up in it. That's a good call, Davin. Okay, good. Let's get back over to the subject at hand, which I think we were going to talk about gold. Now, gold is I'm not going to call it a funny instrument or a funny animal or whatever you want to call it, but you have to be aware, just like the other markets, that gold is going to have certain characteristics to it. There are days when it moves, and you can get some decent moves out of it. Decent meaning more than 20 or 30 ticks. Okay, and there are other days where it just doesn't really go anywhere. So it's kind of a finicky little thing, if you will. The reason I wanted to show a couple of 3 days of data here on gold is that there are conditions where it may be it might be moving in a certain direction for a day. Let me show you some examples. This day was the 17th, which was Thursday. You can see that going into Thursday, this is early. Okay, let me back up for a second here. Here's midnight going into Thursday morning. Here's midnight going into Friday morning, just so you kind of orient yourself on this big picture look at gold. Okay. And then here's the tail end of Wednesday morning, Wednesday evening, Thursday morning, European session. So we can see that in the European session for gold, European being between, say, midnight and 5 a.m., it actually runs till about 8 a.m., but a lot of it's overnight. You were taking shorts. European market was short gold in through here. So the retracement kisses off the midband were short on gold, right? Come up, kiss and roll, that's a short. Take your profits. Trail stop out. Kiss and roll, short. Short all the way down here. Stop out here. 2 short trades in the European session on gold. Yes? Then she flips and starts to get long. Pops up here, mid-band box. Now, for me, here, this would be 3:30 in the morning, 4 o'clock in the morning. That would be 7 o'clock East Coast time. So for early birds, and you're looking at it, now you're starting to take longs on gold. Pops up, pulls back, holds the mid-band bounces. There's a nice long trade for you, early birds. Now look at what happens in the day session for us when we start looking at it at 6:30. That's right about here. Now, for our session, what was the trend on gold? And I'm talking about time-wise between 6:30 when we start looking at it here and all the way into the close. What was the trend on gold for that session? 6 a.m., 6:30 a.m. when we start looking at it, which, like I said, is right about here, into the close on gold. What were we left with on gold for our session? Anybody? Sideways. Good. John, Paul, all right, everybody see that? Byron, Toby, everybody see that? We were left with a sideways range-bound condition. Gold was no longer trending in our session, right? So we have to decide, are we going to trade that? Well, we could see early on that there was some support established right down in this 87, between 87 and 88, right in here. And we can see very clearly resistance was up here in this 90-91 area. So you're looking at roughly 30 ticks. Now, it took its good old time bouncing between these two areas, yes? Here, let me show you what I'm talking about here. So let me explain what I mean good old time. So, here's 6 o'clock over here. Here's 7 o'clock here. So for a half an hour, it just went from here to here. Now, when you see a condition like this, where the resistance is here and support is down here, question, yes or no, do you want to take mid-band trades? When you see a market that looks like this, is this conducive to trading the mid-band? Are we still taking region boxes at the mid-band, yes or no, when a market looks like this? What say you, team? Is this mid-band material or not, in your opinion? No, absolutely not. Hey, JT, cool. I love comments like that. Yeah. Oh, you must have come in late. Hey, wait. Let me back up a second. You probably came in late. That's cool. Let me go back and show you how to do that. We did it earlier on YM, but let's go ahead and do it again on gold, because here's his comments. Very easy to see sideways movement after the fact. My problem is identifying when it's developing. So we're going to do that together right now. In fact, let's take these lines away. Let's do it together. Everybody says that. Everybody says that. But when you know how to do it, you don't say that anymore, because it's really easy to do. Here's how you do it. Okay, here you come in. Here's how easy this is. Watch this. All right, here's 6 o'clock. Where is the upper swing located? at 6 a.m. Pacific. Where is it? It's right here. So what do? You take a horizontal line and you put it right there. There's point number 1, right? 6:02 a.m. Pacific. You're just starting to look at the market. Gary is just opening the room. You're looking at crude. He's got charts up. You're drawing lines all over the place. There's line number 1, right? Okay, cool. Here now, what we're doing, and when you are conceiving of whether you're in a trend or not, and you're thinking possibly sideways, or it's going to trend up, or the trend is over, after you establish a swing here at the upper end of the range, what are you looking for next? Think of it that way. What should be running through your head? We have to be active. We have to be proactive when we look at charts. The traders that struggle, I've found over the years, are the ones who are reactive. In other words, after the fact, it's like, oh yeah, okay, well, I wish I could have seen that like, a half an hour ago. You're looking for support. Right, James. The lower end of the range. We already know that there's support we can see down here, and we can see some level of support kind of in here, but until it's established, we really don't know where it is, yes? Correct? So let's advance the chart together and see if we can find it. It's coming down. It's coming down. Excuse me. Now we're at 7 o'clock. How do we know when a swing is established? That's probably a bigger question. Right? Well, if it's support, it's something that you would bounce off of, yes? You're going to bounce off of support. Once it comes, like the counter to that is when you hit resistance, what does it do? It pulls back off of it. That's established as resistance, yes? It did it over here. Here's kind of a double top. Right? Here we go. We already know that there's some support down in here. We're trying to let the market find it again. All right? You tell me when you think you see support. Type in the letter S when you think you see it. Ready? Here we go. Blow it up a little bit here. So you're 726. It's not like there was any sort of hurry here. I mean, here's 6:30, here's 6:30, here's 6 o'clock. It took a half an hour to get to here. And it took another half an hour to get to here. There's no rushing around here on gold on Friday morning. All right. Okay, here we are at 7:17. All right, I'm going to pause it right there. Wouldn't you agree that over here, by the time it hit this, like, I don't know, 3 times, 1, 2, 3, and then poked up here, that we pretty much have support established right here, right now? Yes? 7:17 Pacific time. We started to try to identify that right here, and now we have it established almost 45 minutes later. Now, I think we all would agree, and I've said this 100 times, and when I don't draw a little arrow like this, it's a classic saying from the ye olden days. As long as we remain within the confines of these lines, we are said to be trending, right? As long as we're stuck between these lines, we are in an uptrend and we're buying support. Is that true? Uptrending, buying support. Mid-band trades, in fact, that's what we're doing. Mid-band trades, right in here. Hello? Is this thing on? No, I'm trying to test to see if you're still awake. Is everybody awake here? I hear some heads hitting the desktop. No, you are said to be range bound. As long as you remain within the confines of those lines, you are range bound. And that is true on every chart that exhibits this type of price action. Every single chart that you do this to and it stays within those lines, it is range bound. And for the most part, depending on the location of the midband and the size of the range, range bound equals no midband trades. All right. Now, I'm not going to say that's 110% true, but I'm going to say it's pretty equals no midband trades. Why do we say that? Why do we say no midband trades in the range? Range bound equals no midband trades. Not enough room even for a scalp. Good. Some of you are thankfully still awake. Even if you put this box on here and you were filled short on the close of this bar here, let's do a hypothetical here for a minute. So you're filled short at 88.70-ish. Where's support? Support's right here. By the time you get out and get filled, unless a little slippage in commission, you didn't make anything. You're contributing to the health and welfare of your broker. There's no meat on the bone. You're just gnawing on some gristle here. It's like you get to the end of a steak or a piece of chicken or something. You're just gnawing on the gristle. Gristle's not good. Nobody likes gnawing on gristle. Right? Likewise, let's think about a long trade for a second out of this box, right? Okay, so hypothetically, you're going to take a long out of the box here. You're going to be filled on the close of this bar right here. Well, a market order gets and you get filled, and then your resistance right here. I mean, it's not even hardly 10 ticks away. Is there any meat on that bone? No. Another full dish of gristle. All right. All the point I'm trying to make is two things. This is a really important takeaway from this exercise, is that, at certain points throughout the day, what you want to do is very simple, and this is to address your concern, JT, that he brought up, which is a rightfully good one, is you put a line here at resistance, and when it finds support, you put a line at support, and as long as you are within the confines of those lines, you are said to be range bound. Range bound means two things. For the most part, unless the only exception to the midband rule would be let's do something different. Let's say hypothetically the range was this big, like 50 ticks, and it was hitting here and it was real clean and clear. It was hitting it, pulling back real nice, coming down here, bouncing off of this, like 40, 50, 60 ticks, huge range. So the distance between here, the midband, and the top might be 30 ticks. Right? See that? There's some meat on the bone here. You're not just gnawing on the gristle. You got there's some meat here. Right? Likewise to the downside. Now you got some room to run. Right? And it might come up, kiss, and roll, and then turn into a bona fide downtrend. It might come up and kiss, pop down to support, and turn into a bona fide uptrend. And now you're rocking and rolling, right? But yeah, that's not the case. Okay, it's really tight range. Resistance is right here, support's right here. No midband trades. No midband trades. You got to know that quickly. Get your lines in and quickly do a visual assessment. How much room do I have here if I get long? How much room do I have to get short? If the answer when you do this exercise in a range and the midband to the outer support and resistance are like around 8, 10, 12 ticks, no Scooby-Doo on the go for it. No longs, no shorts. Then the question becomes, is this range large enough where I want to be buying support here and then selling resistance up here? So somebody mentioned earlier, I have to give credit, I can't remember who it was, is that in ranges you trade the extremes. That is true. In this case here, this whole range is about 30-ish ticks, plus or minus 30 ticks. So it is on the borderline of tradability. However, that being said, the question then becomes, what is your primary mode of entry? Is your primary mode of entry going to be to short the top, cover at the bottom, buy the bottom, take profit at the top, or trade both sides? Let's go through the range together and advance it. And when you think you understand what you might do in this range, you go ahead and type in S for shorting the top, B for buying the bottom and support down here. Well, no. Well, type in S for short, B for buy, and then both for both. Here we go. Let's advance it together like we're looking at it together. Okay, here's 717. There's 8 o'clock. Checking support. So do a mental exercise. Are you wanting to buy that? There it bounces. Okay, now you're at 9:20. You've been looking at this thing for 2 hours. Yeah, I mean, all due respect, how many of you would have had patience to sit here and wait for 2 hours for this to set up? Anyway, let's put that aside for a second. Okay, now you're at 10 o'clock. Now you're at 11 o'clock. So all these bars right here, between here and here, took an hour to form. Yeah, that's the patience of Job right there, I'll tell you. Truth be told, I wouldn't have the patience to sit and stare at this chop, because you know what? Here's how it would really look like in real time. Let me just show you I'm advancing it, which would probably be like 500 times how it really laid out. Okay, let's go here. So there's 944, 955, 10:08. Here's a half an hour between here and here. Toby says, please shoot me now. Yeah, that's a half an hour. What is that, like 6 bars? Oh, yeah. I'd be jogging down to the 7-Eleven for some coffee just to stay awake. All right, you get that? Everybody gets that? Okay, enough. All right, let's go back. What else do we want to look at? Let's shake it up a little bit. We got a little bit of time here left. Want to go back to crude? Anybody want to go back and see crude? We haven't really spent much time on crude here today. Yes? Okay, a lot of crude traders. Let's go look at me some crude. Love me some crude oil. All right, here is Friday. Man, I'll tell you, this is a great looking chart. You're going to love this one. Let's take a look at this. This is the kind of chart patterns I love. Give me some crude oil trades. That is a beautiful thing. Look how nice that chart is. Totally tradable. Man, I wish every day looked like that. What do you think? Anybody want to trade that with me? That is a good looker. Nice trend. You can see where I'm shorting it. You can see where I'm buying it. There's a lot of follow through to the upside. Ton of follow through to the downside. Man, this thing is trading like unbelievable. No, that trade's horrible. Chart's horrible. This chart's the worst. Come on, seriously, just look at it. And and let's go back to this whole address this issue of knowing after the fact. Okay, let's do our little exercise together. Let's take the predictors off. Remember how we do it, right? Because you could do this Monday morning. You're gonna do this Monday morning, right? Let's do this exercise together. Okay, here's the start of Friday. Right there. That's midnight. All right. Okay, let's go look at 6 a.m. That's when the room opens. 5:55. Let's go back and look at 6. What did it look like when the room opened? It'll look like that. So come Monday morning, you go to look at crude oil at 6 a.m. Pacific, or slightly before it when the room opens. What would you do? What are you going to do come Monday morning? What's the first thing we do? Start buying it? No. No, you're not taking any trades right now. You got to figure out what's going on. Yeah, you draw the lines. That's exactly right. Please, a million times please. And you got to pinky swear with us and the whole team here that the one thing that you can do to help yourself visualize markets is this simple little thing. You come over and you get your horizontal line tool, just like this, okay? You come up here to where you see some resistance, and you just put a line there. That's it. It's literally that simple. It doesn't have to be perfect. You know, there's going to be swings that don't quite get it, like here and here. There's going to be some swings that just poke their little heads just above it. Just find like a happy medium and put a line there. Doesn't take more than a couple seconds, right? Likewise, at the bottom, you can pretty clearly see that there is some support forming in a couple of different areas. Yes? You see them. Let me help you. The bigger support, without question, the larger time frame support, all the way from Thursday morning, is down in here around 71.30, right? However, right at 6 o'clock, as you're looking at it, you can clearly see that there's some more support forming kind of right in here, slightly above the 30 support level. And you simply put a line. So literally, how long did that take us to diagnose? Less than a minute. And you're in business. Now I'm going to draw another, and I want this to hopefully stick in your head. As long as we say what? Why do I keep doing this? Am I insane today? Insane in the membrane. Going insane, got no brain. Why does he keep drawing this? What is the saying in between these lines that we say all the time? Right, if we remain within the confines of the line, we are said to be range-bound and sideways. So we've defined it for you. There's no more worry about trying to find it in real time. You've already done it. It's right there. Now, let's do some quick analysis. Watch how long this is going to take you. You come here and you do a hypothetical mid-band box. Like this. Now you don't have to draw it. You can just simply visualize it. And if you took a short and you were filled on the close of this bar right here, around 71, here, let's do it together real quick here. Oops, I didn't want that box. 55. How close is support that's setting up right here? It's about 10 ticks. You're going to try to get out, maybe get out on a bounce at 50, 51. You got filled short at 55. The 4 ticks, less commission. Is there any meat on this bone here? I don't really look at the volume profile, Robert. We don't really track volume too much. I know that there's some trading strategies out there that look at volume. We don't really factor that in. We're more price action people. Yeah, okay, so let's advance the chart and let's do it together. Let's recreate Friday morning. Here's your lines, right? Here's the mid-band, and let's see what she does. Are we still in the range? Yes or no? Now, that being said, you have to come over here, and we are still in the range, yes. Yeah. Now, over here, we are starting to challenge the support levels from Thursday. Now, when this little area set up here, if you made the case and said, well, you know, I'll tell you what, we're getting in a tighter range here, Charles, and I see that we're bouncing off this resistance here between 50 and 60, and every time it does, it bips down here to hit rolling off the mid-band and checks here and breaks it, checks here and breaks it, checks here and breaks it, that these were legitimate short trades, and I would agree with you. I would say yes. When it starts to do something like that and you're shorting it, yes. Yes, you can absolutely do that. There's a little bit of more meat on the bone here because you're not just hitting this level anymore. You're challenging this level, and in fact, this over here, you actually break it. Background is red. We're still kind of sideways, but we're slightly stair-stepping down. Support is now established all the way down here. So the distance between your short up at the mid-band is now much larger than 10 ticks. I think probably 20 ticks. You know, you're shorting just under 50 here. You know, and you got support down here at 30. So yeah, almost in some cases, well, in this case, it was over 20 ticks. Yes. That wasn't until about 7:10, 7:15 you started to establish this pattern right here. And yes, you wanted to short those rollovers. In fact, I think Gary took a few of those in the room, as I recall. I don't think I traded. I don't think I traded crude at all on Friday morning. Yeah, I didn't take any of those, but I think he called those, and I think some people took the shorts up into. He closed the room around 8, so that would have been right about here. Now, here this happens a lot too, and you see this in some markets. Crude does this a lot too. Is you'll get a breakdown at the bottom of the range here, causing you to believe that we're going to get more continuation. This is going to turn out to be a totally legitimate downtrend move. But what would have had to have happened for this downtrend to continue after you got this thrust down right here? Excuse me. If the downtrend was going to continue, what would have to happen here for us to now be out of this range and in a bona fide downtrend? Anybody? I'll give you a hint. I'll put my cursor right around where you would be looking at. Right here. What would have had to have happened for a continuation of the downtrend to occur, in your opinion? Now, I'm helping you out a little bit here. Yeah, right. John, Peter, Mario, Nasir, everybody. This would have had to have rolled over here, right? It would have to come up, kiss the midband area, and we could say up even as so far as that goes, right? Region box right here at the midband, and roll over, break support, and continue to fresh lows. This would be where now you are in a bona fide downtrend and you're trading it accordingly with retracements and all that sort of stuff. Yeah, because that would be a trend now, right? But we got this little power blast down here, establishes support just below 30 down here at 10, comes back up. We do not roll, and it goes right back up into the range. Almost the same range it was in all morning. See that? Now, I got to tell you something. I don't know about you guys, but you guys and gals in here this morning, but, you know, I find this type of thing very frustrating. Yeah, it's very frustrating. There's no question about it, you know. And when you draw the lines on the chart and it stays inside of those lines, with the exception of a few pokes up and down, you know, I have to say it again. You know, if that's something you're really not comfortable trading, if you're not good at that, and you know that about yourself, then you simply avoid that. You just simply avoid it. You don't trade it. Go look at something else. Pull a different chart up. You know, see what ES is up to. You know, see what the Russell. Pull up the Russell. See what the Russell's doing. All right, we got a few more minutes. What else do we want to see? We looked at. Let's get a couple more up here. Anybody want to see something different? Anybody trade currencies? You want to look at 6E or the dollar or what else? Go ahead, type in what you want to look at. Anybody trade the currencies? I see a 6E coming in here from John. A couple you want to see NASDAQ? Okay. The euro is 6E. I'll tell you what we're going to do. Just give me a second here. I think I'll see if I can do this. Try to get. Now, here's the thing. If you're going to trade 6E, you've also got to look at the dollar index. Okay. So I don't think we've looked at that in a long time. So let's get that up there. Set something up here. Give me a second, please. Question for the team. If you're going to trade 6E, why would I say you have to look at the dollar? What is 6E is the euro? It's a waste of time looking at the dollar. What does the dollar have to do with anything? Anybody? Why can't I just trade 6E? What are you talking about? Standalone. Anybody know? What is the relationship between 6E and the dollar? Anybody? Anybody know? They are inverses of each other. They're mirror opposites of each other. Minaj, Toby, Byron, Robert. That's right. Bill. Everybody. Here, I'm going to show you in 1 second. The charts are loading. Give me 1 second here. Hold on. Let me get the dollar chart up here. They are mirror opposites of each other. So when one's going up, the other one's going down. The other one's going up, the other one's going down. And sometimes one leads the other. Let's see if this is true. Now, it's not always true. It's not always 110% true, but most days it is true. All right, one more second. I'm going to load it here. I'm trying to get it to load. Stand by 1 second. It's almost loaded. 6E is the Euro futures, and DX is the dollar index futures. Here, the charts on Friday look like this. Okay. 6E is over here on the left. This is the Euro futures right here. You can see for the most part on Friday you were in a downtrend, right? You broke support, came down, it dropped. This was in the European session. Kiss the mid-band roll, kiss the mid-band roll. These are all short trades, yes? All the way up until about 7:30. And then it changed. Now, here is the dollar. What was the dollar doing in that same time frame? Here, let's get oriented. Here's midnight Pacific over here. Okay? Here's midnight Pacific over here. Yeah, dollar was heading up, right? So you're buying the dollar, right? You're buying the dollar. You had this box. Let me just so everybody's on the same page here. This box on the dollar at about 1:30 Pacific. This is the European trading session. Was this box on 6E? More or less this box on 6E. Right in here. That box is that box on 6E. So you can see you had a very precipitous sell-off on 6E coming out of that box like this. Likewise, you got just a power blast up on the dollar right here. So if the takeaway from here is if you want to trade these currency futures, and it's going to be 6E and the dollar, you got to have pretty much the charts right next to each other. Sometimes one will break ahead of the other. And now when that happens, it's a good precursor that the other one's going to go in the other direction. In other words, let's say that for some reason 6E starts to sell off and dollar index is still in the box. There is I don't want to say 100%, huge likelihood that that's going to pop up, and you can go ahead and anticipate that long trade if you're trading these two together. Okay, pop question from Thursday, part 1 of this webinar. Is this a legitimate? I'm only going to give you 5 seconds. I'm going to get 5 seconds. This is going to be a yes/no question. You simply type in a Y for yes, N for no. Is this a legitimate region box to get long on the dollar, yes or no? 5 seconds. 4 seconds. You're typing in a Y for yes and an N for no. If you were trading the dollar index at this particular time on Friday morning and you were looking to get long, is that a legitimate box, yes or no? 3 seconds left. Very simple question. 2 seconds. Would you take it? I know it's 5:30 in the morning. You probably weren't even watching it, but hypothetically, 1 second left. Yes or no, is that legit? Okay, time's up. Yes. So the reason is if you recall from Thursday, the criteria for retracement is it has to pierce the stealth line in an uptrend. Background is green. Bars are predominantly blue. It has to come through the green stealth, find support. In an upper level trade, it also has to pierce line 6. This thin line right here has to be breached, which it does. It meets both of those. Check mark 1, check mark 2, beats the criteria. We put a region box. You're filled long on the close of this bar right here. So the answer was yes. Good. Most of you got that. Let's do another one together. Let me turn off the chart just pause it for a second. Let's do another exercise like that on the dollar and on 6E. Okay. All right, let me position this correctly. Get the two charts synced up. Okay, so this would be, let me see, it's right about 8:10 a.m. Pacific. Ready? Okay, the markets look like this. It's right around 8:15 Pacific time on Friday morning. This is a yes/no question with 5 seconds on the clock. Is this a legitimate long trade on 6E? Yes or no? It's a two-part question. And is this a legitimate short trade on the dollar? 5 seconds. 4 seconds. Long 6E, short the dollar. 3 seconds. Just a yes or a no. Legitimate long, legitimate short. Long 6E, short the dollar. Time's almost up. 1 second. Is it yes or no? It's just a Y or an N. 1 second. Long 6E, short the dollar. Okay, time's up. Now, this might have been a little bit confusing in the fact that, more from the dollar perspective than the 6E perspective. I can see where over here it's a little more clear that you are trending up on 6E and that you have pulled back into the midband and you are holding it. So with respect to the long on 6E, the answer is yes, because it's holding the support, background is green, and the trend is up. This is a legitimate long trade on 6E. Where it's a little more confusing on the dollar is that you have a transitional background. You're coming off of an uptrend move here. And you might be thinking at the time that this dollar, now, okay, we've broken support and the bars are red and it's kissing the midband and it looks like it wants to roll. However, at the time that this formed, you might have been a little bit confused in the fact that, well, I think it's going to roll. So what would be the condition that would cause this to roll? Remember we talked about the relationship between these two? What would cause this to happen? What would have to happen over here for this to happen? Think about the relationship between the two instruments, right? If this was going to happen, what would happen over here? Remember what's going on? Right. 6E would have to break up for the dollar to sell off, yes? That's right. It would have to resume the uptrend. That's correct. You would have to get this on 6E for this to occur on the dollar. Now let's see what happens. Okay, you're sitting at support, popping up. It did follow through to the upside. That was a legitimate long trade, yes. So let's see what happened to the dollar. Kisses the midband, rolls over, and there's your short. Now, what I want to do is this. I want to look, not bar by bar, but I want to look at when the break occurred in relationship to each other. You can make the case that the break here happened at 8:50, well, sometime between 8:46 and 8:52. And over here you're looking at 8:46 would be, well, all the way over here. 8:52 would actually be over here. So it was almost exactly at the same time. Yeah. See, those algorithms are tuned to where it's going to be within a few seconds or less than a minute that the you're going to get a push, get a nice push up there. That turned out to be a nice long trade here on 6E, and you got a nice short trade on the dollar. Dollar came back up, kissed the midband, and rolled. Let's see what 6E did. Yeah, see it came back and kissed. All right, let's see. Oh, almost out of time here. Any final questions? If you're not finding anything is going on the equities, like in Friday afternoon, or, well, the European session would have been closed, so there really, you couldn't really have traded the currencies. But, let's say you're an early bird, you like to get up early, or you're a night owl, you're up late looking at markets. You can look at the currency futures, and nothing's going on with the equities, and you're looking for some price action. So let me give you some tips or some ideas in that area. So the Asian session starts at 5 p.m. Pacific time and runs through midnight. So instruments you might want to look at would be like 6J and 6A. 6A is the Aussie dollar futures. Tend to be active in that session. Let me just put this in here. So if you're a night owl, you're looking for something to do, pull up the charts with all our indicators on it, what have you. And then the Euro session, of course, in terms of currencies, the European trading session, that starts around midnight Pacific. And currencies you could look at would be 6E, 6S, the Swissy, and the dollar index. Okay, so if you're a night owl and you're looking for something to do in these time frames. Now, you have to be aware of a couple of things here. You want to go into Forex Factory and look at the news around these time frames, because if there's some economic announcement coming out in England around midnight or 1 or 2 in the morning, and you're trading it, and it's going to cause the euro to just freak out, you're going to need to know that. Okay, let me show you how you do that real quick here, and then we'll wrap this up. Okay, here's the calendar we use for our economic impact news. What you're going to want to do here then, you go in here to next week is what, the 20th through the, let's see, yeah, 26th. Okay. Anyway, you want to add next week, and then you go in here and you want to filter. Well, so if you're trading the Asian session, you're going to want to see news on the Aussie and the yen futures. So that's JPY right here. Okay, this is the Forex cross pairs, cross of the foreign currency versus the dollar index. That's why they all have relationships to the dollar. This is the Canadian. Sometimes that moves. Here's the euro and the British pound, 6B. Yeah, that would be the other one. And then Swissy. CHF is the Swiss franc. Apply filter. Let's see if I can get some data to come up here. Let's look at Sunday through, let's see, next week? Next week, here we go. Apply settings. Yeah, okay. All right, so here's all those instruments on each day. So Sunday night, all day, Swissy bank holiday, so maybe not too much move in these currencies. Back over here, 6B is the British pound, 6 1/4 a tick. I used to trade these a lot. I don't do them too much anymore. Okay, yeah, you could trade that, Robert. Definitely. Yeah, so you can see here, for instance, ECB financial stability review, just a minor impact. But it'll pop up. Here's British pound, 2 a.m. on Tuesday. High impact inflation report. What I'm saying is that if you're trading 6B and this news comes out, you can expect a reaction. It's kind of like the news for us in the futures, like at 7 a.m. if we get an ISM report or something. Probably won't move it around too much, but you never know. You got to be aware of it though if you're going to trade it though. So that's what I'm trying to say. Here's an Aussie dollar announcement at 1 a.m. CPI England, British pound CPI, G6B impact on Wednesday. Okay, you get the idea. I think